Traders, you are pretty much screwed because there are so many strategies out there. How do you know which one is right for you? Well, let me help you guys because we are going to look at some of the most viewed, some of the most trending strategies online to see if they actually work and if they are right for you. So let's get into it. In this video, guys, we are going to test this strategy right here. It is a scalping strategy, and the title of the vid is this: Easy Scalping Strategy for Day Trading Forex, and it has a high win rate. It doesn't actually tell you the win rate, which is a little surprising. If it had a high win rate, you'd probably shout about it. But there you go. We're going to test it anyway. And as you know, with this series of videos, guys, we're looking at strategies that have super loads of views. So this has 1.5 million views, and it also has over 2,000 comments. And if we just quickly look at a few of these comments, you know, all really positive. I am one of those testifying to how powerful the first strategy is. It's really paying off. We've got another one here who actually gives us a win rate, right? Thanks for this strategy. I just back tested it on Bitcoin on the 5 minute, and we're almost at 75% win rate, right? So, you know, people are using this strategy, people are testing it, and judging by the comments, it's had some good feedback. But what we're going to do, guys, is look at this strategy in detail, understand the entry criteria, the exit criteria, stop losses, take profits, and we're actually going to put this strategy to the test on some live charts. All right. So let's get stuck in. Let's listen about this strategy and pay attention, guys, because you really want to know all the criteria. Therefore, we can test it. All right, so let's get going.
In this video, I'm revealing a simple and profitable scalping strategy that is proven to have a high win rate. So without further ado, let's get on with the video.
Okay, this is a faceless video, right? But where do you think his voice is from? Leave a comment.
For this scalping strategy, I'm using three types of exponential moving averages: the 25, 50, and 100 period. And I'm going to be using the 5-minute time frame. So this is how the strategy works. The first step is that we want to find an existing trend. And the way we do that is by looking at the EMA. All three lines need to be heading in the same direction and are also separated from each other like this. Remember, we don't want ranging markets like this, which can be identified by the EMA heading sideways. You also want to avoid markets where the lines are crossing each other like this. Remember, we want the three indicators to be in the same direction. The position of the candles are also important. You want to find a setup where the candles are fully outside of the 25 EMA like this. So, once you've identified the setup, the next step is finding our entry signal. Our entry signal will be when the price makes a pullback and closes below the 25 or 50 EMA. Let me show you what I mean. So in this chart, we have spotted an existing uptrend as shown by the 3 EMA. All of them are heading upwards while the candles are above them. Next, you want to wait for the price to make a pullback towards the 25 or 50 EMA. And so this will act as your entry setup. The next step is to wait for the price to go back to the 25 EMA again. Once this happens, you take a buy position here. However, if the price instead went down and broke below the 100 EMA, you cancel your whole setup and look for other trade opportunities, because this may indicate that the trend is changing. Now for your exit strategy. So, let's say you took a buy position here. You want to set your stop loss.
Okay, so how we enter is quite clear, right? We are looking for price to be above the moving averages, which this is. Okay, we want the moving averages to be fanned out, which, as you can see, these are fanned out here. Okay, and then when price moves back into the moving averages, he said he wants the candle to get to the exponential moving average 25, but Judging by this, he's looking for the candle to close above the exponential moving 25. All right. And this is where he buys. Okay. Obviously, the opposite would be true in a downtrend. And I believe there is a downtrend example as well. So entry and where we buy, all very clear, all very simple and easy, as he explained in the title. And I don't know if you can see this, but in the top right-hand corner, top left-hand corner, guys, this is euro pound, right? So just to keep some continuity, we will test this on euro pound later on in the video. Okay, so let's carry on. So we know where to buy. Where do we put our stop loss and what is our target? So let's carry on and listen.
Loss at the 50 EMA. And for your profit target, you set it at 1.5 times your stop loss.
Okay, so also very clear. Stop loss at the EMA 50 and your take profit is 1.5 your risk. This is your risk. This is 1.5 your risk. All right, all very clear, easy to understand. Let's see if they've got a couple of examples themselves.
So, here's an example of this strategy in action. In this chart, we can see that the market is currently on an uptrend as shown by all three EMA heading upwards, while all the candles are above the EMA. Next, we are waiting for a pullback towards the 25 or 50 EMA. But remember, it must not cross below the 100 EMA. So, once the pullback happens, the next step is to wait for the price to reverse back up to the 25 EMA. Once this happens, you take a buy position. Next, we set up our profit target and stop loss here. And as you can see, the price ends up hitting our profit target, so this counts as a successful trade.
Okay, and again, I don't know if you can see this in the top left-hand corner. This is New Zealand dollar against the Japanese yen. All right, so this would be another currency pair that we'll test it on in the live chart short.
Let's look at another example. In this chart, we can identify an existing downtrend, as shown by all three EMA heading downwards, while all the candles are below the EMA. Next, we are waiting for a pullback towards the 25 or 50 EMA. And remember, the pullback must not overlap the 100 EMA. So, once the pullback happens, we wait for the price to go back to the 25 EMA again. And when it does,
when he says go back to the 25 EMA, you know, we're going to take that as he means this candle closes below the 25 EMA, right? That's going to be the criteria, just to clarify that, guys, because it's not super clear. But yeah.
You take a sell position here. Next, we set up our profit target and stop loss here. And as you can see, the price hits our profit target, and this would have been a successful trade. So that's how you trade the triple EMA scalping strategy.
Okay, guys, so all very straightforward, right? Because we're going to test this strategy now in the live charts. You've got the three exponential moving averages. You've got a pullback into the exponential moving averages and then a close below them. And then basically you can trade in a downtrend, right? If it goes above the 100 EMA, it cancels the trade in a downtrend, okay, with the example we've just seen. But we're going to test this on Euro Pound and New Zealand Dollar Japanese Yen, because that is the charts that this fine gentleman showed the examples on. And generally speaking, guys, you know, scalping strategies are quite popular because you're in and out. You're not in it for a long time. And a lot of our scalping strategies have been very popular. And a lot of them use exponential moving averages, and they are very simple, right? So there's lots of reasons why people like these easy scalping strategies. But let's put it to the test to see if it actually works, right? So we're going to take a look at the live charts now. Before I do, please don't forget to subscribe to the channel, smash the notification button, and please smash that like button, guys. Please don't forget to check out our website, www.simply-forex.com. And also, please come join our trading community. We have a free Discord channel. Check it out. All the information's below the vid. And also, guys, if there is a strategy that you would like me to test in the live charts, then please leave a comment below and we will check them out. Right, let's take a look at the live charts now. So as I said, guys, we're going to test it on Euro, Pound and New Zealand Yen because those are the examples in the video we just watched. So this is Euro, Pound. Right, and I'm not going to go cherry picking, right? We just want to honestly look at this strategy and see if it has potential, right? So all I'm going to do, this is the 5-minute chart because that's the only chart and time frame he uses. I've put my exponential moving average on, right? So this green one is the 25, the blue is the 50, and the white one is the exponential moving 100. So exactly as he explained, right? Now, all I'm going to do is I'm going to use this button here. So this button right here, guys, on TradingView, the bar replay button is really good for kind of practicing this strategy in real time, but in the past. Okay, and I'm just going to use this back to the future button and randomly pick, I'm going to go out and just randomly pick an area. Right, here we go. Okay, so I do not know what happened. This is Wednesday, the 14th of May at 6:20 on the 5-minute chart, right? I have no idea what happened here. Now, obviously, this is not what he wanted. He said if the exponential moving averages are all intertwined like this, we do not have any setup. So we're just going to play this along until we see the moving averages start fanning out and we get the criteria set up as well. All right. So if I just play this along and I'm, happily enter buy or sell trades, right? So let's play this along until we start seeing those moving averages fan out. Talk amongst yourselves while this happens. Yeah, so that's exactly what he didn't want. Yeah, the moving averages are all very close together. Okay. And it's always sod's law, guys, because I'm doing this so randomly. Right, here we go. I would say we have a setup, right? So we have the moving averages fanning out, right? 25 is above the 50, and we have the 100 as well. Okay, so that meets the exponential moving averages criteria. We have price above the moving averages, right? And it's coming back in now to test the moving averages. So this qualifies for a buy trade. Okay. Now let's zoom in, because if you remember rightly, what he was looking for was price to come into the 25 or the 50, right? And then we get a candle that breaks above the exponential moving average 25. So let's just play this along each candle now. So let's just play it along one candle. Okay, right? We have an entry. Okay, so let's get our long position. Remember, we're entering here. We are putting our stop loss at the 50. Right, that is bang at the 50. And if we come down a bit, we're basically looking for a risk to reward of 1 is to 1.5. So if we just bring that down a little bit, roughly there, guys. Right, so you can see the risk to reward ratio here is 1.5. So that, as per the strategy, the scalping strategy we have just seen, is a viable trade for us to enter, right? I hope you agree. You saw the same criteria I did. So let's play this along now. Let's play it along a little bit slowly so we can see it play out. Right, there we go. That is 1 is for 1, right? That was a winning trade. Okay, let's play it along. Let's see if it comes back and tests in this area again, because our criteria is still met, right? We've still got the moving averages fanning out. Price is above the moving averages. We might get another setup very shortly. So let's play this along. Okay, so here we go, right? We are back into the moving averages. A little bit ambiguous, a little bit of ambiguity here, guys, right? You know, has that closed above the exponential moving average? I would say yes, it has, right? I don't like the top wick of that candle, but he didn't mention anything about the shape of the candle or what he was looking for. So again, let's just use this same one here. Let's just adjust the stop loss to the 50. Right, there's the 50. And then let's just make this a 1:1.5. Okay, there you go. Right. Sorry, guys, I have to adjust that as well. So there's the buy trade. We enter on that candle. We adjust this to 1.5. Okay. So again, this meets the criteria, right? The trap is sprung or set, not sprung yet. And let's play this along again. I think you agree, meets the criteria. Moving averages fanning out, right? We've prices above the moving averages, comes back in. Again, because of this candle, I was more comfortable with this setup. But again, let's just trade it as per the strategy. Just about holding on. Might be got caught out with a spread. I'm saying we're stopped out with this example here. Now, again, you know, this has just been picked, guys. I haven't, you know, picked this section of chart, you know, it was purely random. But again, you know, you have to think about that candlestick. That wasn't super bullish, right? But also, as we were in the trade, right, price was just doing nothing. So it just missed our stop loss down here. You know, you can take these strategies and add rules yourself. Like if price doesn't move anywhere in this amount of time, just get out of the trade. You could have potentially gotten out a break even or even a small profit. Because at this point, look at the moving averages as well, right? They're all scrunching together, and that's exactly what he didn't want, right? So sometimes these strategies are not as black and white as they make, and I would manage that trade and actually have gotten out of that trade. Okay. But again, let's play it along. We'll look for one more example on euro pound, and then we'll take a look at New Zealand yen. Let me get rid of this. And let's play it along. Right, remember we're just looking for those moving averages to fan out, the exponential moving averages. Right. Again, there is a little bit of ambiguity with regards to are they fanned out enough here? But according to the strategy, we never got a setup anyway. We didn't see price leave the exponential moving average 20. So there would have been no trade here anyway. Right. So let's play it along. And also remember, he said it was void if price just continued on below the 100 exponential moving average. And that's what happened. So this was null and void, guys. There was no trade here. Let's play it along a little bit further. Right. Definitely meets the criteria, right? Price is well and truly above the exponential moving averages. These are fanning out nicely now. Okay, potentially another setup incoming. Let's play it along a little bit slower. Right. So we have retraced into the moving average 20s, the moving average 25. And we're just looking for a candle to close above it now. So as you can see, guys, we've met the criteria here, right, in terms of a retrace. But this is interesting, right? You know, again, this is a little bit of where a bit of ambiguity, a bit of potential confusion comes in, and it's open to interpretation because the moving average 25, the exponential moving average 50, and the exponential moving average 100 have fanned out, right? That's fanned out enough for me, but they're starting to, turn because obviously price has retraced into it. But I still think this is if we get a setup, this is still as per the criteria of the strategy. Okay, so let's just play it along a couple of candles to see if we get, okay. So now we've got an entry, right? So again, let's do the long position, right? This is where we're going to buy from. This is, we put our moving average, our stop loss to the moving average 50. Okay, and then we're looking for risk to reward of 1.5. So that's basically it. Okay, so there you go, guys. Again, we had the candle that closed above the exponential moving 25. We put our stop loss at the exponential moving average 50, and we're looking for 1.5 to 1 risk to reward, right? So let's see if this plays out. Right, okay. So straight away, that one played out as well. So in the short space of time that we've been looking at euro pound, guys, this is looking pretty good, right? We've had we've had one good trade. We had one that, required a bit of common sense, but if we followed the strategy, that would have been a losing trade. And we've just had another winning trade here, right? And because the risk to reward is 1 is to 1.5, you've currently lost 1% and you're up 3, and you've made 3%. So you're plus 2%. Now we're going to take a look at New Zealand yen and test it on there. So this is New Zealand dollar, Japanese yen, guys. And again, we are just going to randomly go back in time. So let me come out of the back to the future button. I am going to use just randomly pick an area. Right, here we are. Okay. Now, funny enough, this would actually be an entry. Let's just play it on from here. Okay, so let's look for our first entry. So again, this is a downtrend. Would you say the exponential moving averages are fanned out enough? Probably. Okay, maybe not enough. Let's play it along a little bit and let's get a clearer setup. Let's speed it up a little bit. I'm just waiting for those exponential moving averages to fan out in either direction, guys. Right. Here we go, right? I would say the exponential moving averages are starting to fan out. We've got price below the moving averages. This is setting up for a sell trade, right? We just need for the criteria to be met. So let's slow it down now and let's just play this along. Right. We have had our retracement into the 25 and the 50. Remember, we're just looking for a candle now, bearish candle that leaves the exponential 25. Okay. If price comes above the 100, remember the trade is void. Right, let's play it along. Okay, so this one's void. Let's speed it up now and continue looking for another trade. Again, okay, so moving averages are fanning out. Yes, I would say so, right? They're fanning out. Okay, price is below. Remember, we're looking for a candle to close back below the exponential moving average. I mean, interestingly, this candle does do that. It hits the exponential moving averages and closes below it. But I would still wait for another bearish confirmation candle here. Okay, so let's slow it down now. Okay, there we go, right? So we have, let's go back a bar, we have our entry. Okay, so again, this is now a short trade, a short position. We enter on this candle. Okay, we put our stop loss at the 50 and we're looking for a risk to reward of 1.5. So keep moving this down. So there you go. There's the trade poised, ready to go. Let's see if this plays out. Did that hit target? Probably not quite, right? I mean, we do have a saying, Simply Forex, don't be a dick for a tick. You know, maybe you would have taken profit there. If you didn't, you're stopped out. So very 50-50 that trade. Okay. But yeah, I mean, if we're keeping it to the letter, that didn't hit target. And that was a failed trade. Let's speed it up. Let's carry on. Let's keep testing the strategy on New Zealand yen this time. You know, although price is clearly above the exponential moving averages, look at the moving averages, right? They're all intertwined. That's not what we want. So I'm just waiting for them to fan out. I would say they are fanned out enough, right? You can see here, fanned out enough. Let's wait for that pullback. Let me slow it down a bit now. Let's play this along. Right. We've had the pullback, right, back into the moving averages. We're just looking for that bullish candle now to come out above the exponential moving average 25. So let's play it along. See, I would say we do not have a candle that has closed above the exponential moving average 25. So I would wait for that, guys, right? You can see none of these candles close above it. They're all wick back into it. But the trade is still valid if we get a bullish candle that does this, not until it breaks the exponential moving average 100. So this is still potentially a trade. Let's play it along. Right. There we go. We have a trade, right? We have prices pulled back into the 25 and or the 50, and then price, this candle here, has closed above the exponential moving average 25. Sorry, wrong button. Let's look for a long position. I'll click the right button in a minute. So we start buying here. Right, we put our stop loss at the moving average 50, and we're looking for 1.5 is to 1. Okay, there we go. Let's have a look. Okay, stopped out. So it looks like, you know, and you'll find this with strategies, guys, right? So I like the simplicity of this strategy, right? And the fact it just uses 3 exponential moving averages, the entry criteria is very clear, stop loss placement and target, right? And the fact that the risk to reward is more than 1 is to 1, right? The risk to reward is in your favor. Now, just in this short piece of back testing that we've done, right? Obviously, you need to go away, guys, and back test it yourself. And using this rewind button on TradingView is a really good way to do this, right? Because you practice the strategy in real time. You don't know what happened with New Zealand yen on the 19th of May, right? So it's like you're in real time. Okay, so this is a great way to test it. And, you know, you'll find that some strategies are more compatible to certain currency pairs. I mean, in the short you know, back test that we did, euro pound was more effective than New Zealand dollar yen. So, you know, test it across different pairs as well. So yeah, and guys, I hope you've enjoyed testing this strategy with me. Please let me know if you do trade it and you get some results. It'd be really interesting to see. Also, let us know what other strategies you would like us to test in the comments below. Don't forget to subscribe, like, and share, and I'll see you for the next vid.